Okay, so basically we're going to be looking at Bitcoin and what the Federal Reserve is going to do to Bitcoin and the stock market. And as Bitcoin is going to this QT period, this is going to be very, very important. But there are a number of important and surprising decisions that you will see. So it's not going to be all doom and gloom as in the past. People assume what I'm going to say is, oh, the Fed's going to start QT and it's all going down. In fact, nothing further could be from the truth. And I think if you've been watching my social videos, you understand that there is actually a good period we might have where the markets could bounce. Now, I'm back from Melbourne. This is Pablo's investment, weekly, whatever you want to call it. Let's dive straight into it, okay? Shall we? So basically, previously, if we were lazy, if we didn't do our research and our homework, we would assume that when QT starts, basically, then it is all over. And this is what happened last time. And this is the only time we have to compare to. So these candlesticks here, red and green, are Bitcoin price. And this blue line's QT. And the yellow line is the Nasdaq. Now, here's the thing. It would appear, if we're lazy, to see that as QT started, which means the Federal Reserve's asset balance sheets started dwindling, which means they started doing the opposite of printing money. They're taking money back from the economy. Then basically the Bitcoin just plunged, right? And then what happens is stock market also plunged sometime later. I mean, there was some time in between. So what's going to happen this time? Now, I went ahead and I did, and I said in my Discord. And by the way, as always, these videos go out to my friends in Discord first, and then I'll put it up on social media a few weeks later. A couple of days later. So, if we were to look seriously into this research, basically in 2017, they said on the 20th of September, Fed states balance sheet normalization to begin in October. What that essentially means, if we boil it down, is in October they will start doing their balancing or normalization of the balance sheet. Normalization basically means we've been pumping the market, we've been pumping the hell out of the economy. Now we're going to basically normalize, which means we're going to take it back to where it was before the GFC. So what they were talking about was before the pump, which would be quite ridiculous. What they were talking about is, this is what they mean by normalization. Of course, it's a joke. They would never achieve it. Remember 2000? No, it looks horrific, doesn't it? 2000. Okay, this chart doesn't even go back far enough. But in 2008, 2009, before this blue line was way, way lower, then it just came up to here, and now they're trying to normalize, which is take it back down, which they never ended up achieving. But here's the thing. Let's have a look at October 2017. Here is October 2017. Let's see. That's the 1st of October 2017. Bitcoin coins closed at $4,377. Let's call it $4,400, right? If we were to do it at a log scale, that's what it looks like. But just to give you an impression of what it actually did, it went from 4,400 all the way up to almost 20,000 on Bitcoin. So it was a massive 3.5x move, and then basically this was 17th of December. So because I couldn't find an exact date on when exactly normalization of the pump started, but essentially they were saying start of October. So I assume that we take that as 1st of October, and basically that means you got October, November, December. That's 10 weeks, 10 or 11 weeks. For 10 or 11 weeks after QT started, Bitcoin pumped and also the Nasdaq pumped. So can we expect the same thing to happen again? And it made a massive pump. First, and then Bitcoin topped and crashed 85% because this was just taking too much money out of the market. Nasdaq topped, you could say it was 1st of October, so it was exactly 1 year later. Or you could say take this top, which was 30th of August. That's 11 months later. So here's the thing. there are a number of important differences. Let's go through them. If you still think that QT isn't important, let me just point this out to you. Fed signals more flexible approach to balance sheet normalization. What does that mean? That means they're saying, maybe we shouldn't QT so hard. Maybe we shouldn't do $50 billion a month, which is what it was doing. Maybe we should do 30, maybe 40, maybe less. Feb 26, 2019, Jerome Powell says, decision on balance sheet normalization to be made soon. They're saying we might end it. We're going to make a decision soon. Now, on March 8th, Powell says balance sheet endpoint likely to be higher than before the recession, which means we're going to end it. There's going to be endpoint, but we're not going to take it back to zero because we pumped $4.5 trillion into the economy. We can't take it all back. If we do, the US economy will crash. And March 20th, intend to slow down its balance sheet and then to end it, right? So essentially, and then they ended in July. Okay, but as you know, the market always tries to anticipate what happens month ahead of time because right now we haven't even started the QT yet. We've only raised rates once so far by 25 basis points, and yet Bitcoin. Say, look at this. Bitcoin has fallen since November. The high was on the 10th of November for Bitcoin. So, and we've just started, haven't even started QT yet. So basically, if you look at what happened here, the Fed essentially was talking about slowing its balance sheet drawdown and then to end it. And then they're talking about, an endpoint, likely to be higher in the. So I would, and then they're talking about decisions on balance sheet, to make soon. So all throughout January, February, March, Fed was hinting like what they're doing right now. Fed was hinting we're gonna maybe end, the market was speculating. The Fed was talking about it. Hasn't made a decision yet, like what they're doing right now. A lot of talk, but they're hinting to the market there could be an end to this QT. I would say official announcement is something like slow balance sheet, tapering, and then end it on March 20th. So let's see how the market's performed. Now, here's the thing. Look at this. March 20th, 2019. So we started October. Let's have a look at this. We started October, right? 2017. Made a 3x pop on Bitcoin. I can tell you right now, I don't think that's going to happen. And then 2019, by 2019, remember in January, they were talking about, normalization to, being flexible with normalization. By February, they're talking about, that's maybe there will be an endpoint. And by March, they said, okay, this is the time schedule. We're going to taper down QT, as in now we're doing $50 billion a month. Now we're going to do 40 billion, 30 billion, 20 billion, $10 billion a month. And then, basically we'll end QT, which means they were talking about that around March. This is where Bitcoin was around March. So this might give you an idea, right? QT started here, then it pumped, then went to a massive bear market as QT continued, and then they announced end of QT around here, around this area. That's the official announcement. But as you know, the market, like what they're doing right now, would have been guessing there's an end to QT around here, right? Do you think QT is important? When they talk about the Fed saying we're probably going to end it in July this is our timetable for ending it, that's what Bitcoin did, right? It went from 3,900 all the way up to 13,000, 14,000. That's another 3x pop, right? So this is how big and how important QT is. So the bigger question is, what do we think will happen with Bitcoin this time when they start QTing? Okay, there are a number of factors to take into account. Let's see. So essentially, okay, my thinking is this. Now, you basically had the Federal Reserve there are a number of things that are different this time. This time they're not QTing 50 billion. They're QTing 95 billion, which is almost double. And yet, do you think the US economy, the US GDP is twice as large as last time? If not, then how do you think it can take twice as much QT? Second of all, the US economy right now, they're doing last time they slowly ramped it up. It took them 1 year to go from $10 billion a month QT all the way to $50 billion a month QT. It took them 1 whole year, 4 quarters. This time they're going to go in 1 quarter, which means faster acceleration, which means they're going to go start. I think they're starting, they haven't announced yet, but the market's predicting they're probably going to start somewhere like 20 billion and then go 40, 60, 80, 95 in about 3 months' time, which is actually quite quick, quite fast if you think about it. So basically, it's a very fast pace of QT. It's twice as much as before, and it's 4 times faster. But even though that is going to be the case, I still think, so if they start in May, which is also, oh yeah, one more thing to keep in mind. Last time they announced they were going to do QT something like, they started raising interest rates in 2015. So imagine this. They started raising interest rates in 2015, right? We can probably actually pull this up on a chart. Let's see, Fed funds. Fed funds, huh? Oh no, wait, not that one. Sorry, Fed funds. So we can have a look at when they started raising rates. Again, this is different from last time as well. So if we take a look at this, they started. Remember, interest rate went to 0 and basically didn't start going up till about 2015, right? 2015, it started. The first move was October, November 2015. We saw this move here. That's from around 0 to, this is all, even though this is just on a chart, that's 8 points, 8 basis points. That's nothing, guys. That's just the effective Fed funds rate. It's still near zero. And then the first move came in November 2015. And then as we saw interest rates go up. And then November 2015 to October 2017, that's 2 years later. Remember here, that's 2 years later, after 2 years of 9 rate hikes. There were 9 rate hikes in between, and then basically they started doing QT. Okay, this time, you know what they're doing? This time, they're basically doing 1 rate hike, 0.25 percentage points, and then they're basically going to start QT. So everything's accelerated. Everything's so much faster this time. So basically, it's okay. That's summarized. Last time they did 50 billion. Now they're doing 100 billion QT, 95 billion. Last time they took 4 quarters or 1 whole year, 12 months to go from 0 to 50 billion QT. Now they're starting from 10, 20 billion and going straight to 95 billion in 1 quarter, 3 months. Last time it took them 2 years and 9 rate hikes to eventually start doing start QT, because rate hikes and QT are not the same thing. One is raising the effective Fed funds rate. One is actually, selling bonds, or not letting maturities, just letting maturities of Fed-held bonds run off. And this time, last time it took them 2 years to raise rates and then hike rates 9 times, and then start QT. This time, basically, they only raised rates once, and it's one. It's not even what they started. They did it on March 16th. And now, if they do QT this time on May the 4th, it would be something like 1.5 months. Instead of 2 years, they're going to do it straight away in 1.5 months. So there are some major differences. Now, the thing is, okay, what I think. So then you're saying, Pablo, you're saying it's very negative. Obviously, the Fed is not really being gentle this time. It's not like a slow build up, ramp up. It's basically, it's like it's like jailhouse sex. It's not like your first time with your boyfriend. You're like, please be gentle. It's nothing like that. It's more like you're in jail and it's your first night. They're like, boy, turn around, get down, right? It's like that. So it's going to be rough. It's going to be fast. So does it mean Bitcoin or the stock market is not going to make a new high? Isn't going to crash? I think there are a couple of other differences we should bear in mind. So have a look at this. Basically, first of all, it's not likely. That's why I say I don't think Bitcoin's going to do a 3x from here. If Bitcoin were to do a 3x from here, it would be at 120x. I don't think that's going to happen this time. However, what are the key differences this time? There's a few differences. As we've been pointing out, Bitcoin right now has been moving very closely with the Nasdaq, right? Okay, if we look at today, this is the last few months. If we look at, that's Bitcoin itself, and the yellow one is that's basically the Nasdaq. So they are pretty much, as we can see, they're pretty much in sync, right? Now, whereas that wasn't the case before, right? There were bigger differences between Nasdaq and Bitcoin before. So as we can see here, you would not say that the Bitcoin and Nasdaq are more in sync here. So for one, I don't think Bitcoin, that's because Bitcoin has matured. It's not as a small, this little coin like before where it can just pump. I think, Bitcoin is, now if this was to happen, Bitcoin would probably move more like the Nasdaq, more something like this. Maybe top off like a month or two before, make a top a month or two before the Nasdaq and crash. So what I'm saying is this: if Bitcoin is as big as it is now, which is a more mature asset, nearly 1 trillion with the entire crypto market cap 2.5 trillion, then what would happen is, rather than a short spike like this, go up 3x and then dump for the rest of the year, it would actually go up slowly as QT was happening, and then almost a year later, as the Nasdaq topped, then Bitcoin would top, maybe a month or two beforehand, and go down. That would give us, to top 1 or 2 months before the Nasdaq, would give us around, say, around here, right? That would give us, say, a 10-month or 9-month run if we were to go by 2017 standards. Now, here's the thing. Why am I saying Bitcoin would top 1 or 2 months before the Nasdaq? Because here, look at this. Look at the most recent crash. Basically, Nasdaq's top was December 27th. Bitcoin's top, as we just saw, was November 10th. So it came in one and a half month before the Nasdaq. And then look at the bounce here. The Bitcoin bottom bounce was Jan 24th. Nasdaq's bottom was March 14th. So again, that's about 3 weeks beforehand. So we could say Bitcoin moves in kind of in unison with a lot of correlation to the Nasdaq, but also sometimes Bitcoin can move a few weeks earlier than the Nasdaq because it's seen as even more of a risk-on asset. Now, if that were to happen, then essentially I think this time, this time Bitcoin is going to behave a lot more like the Nasdaq, which means not to run up and then crash straight away and go into a year-long bear market, but basically top maybe about a month or two at most before the Nasdaq, which would give us a 9-month run. If this happened in 2017, right? But this is not 2017. This time, I've just said that the Fed is QTing a lot earlier. The Fed is, QTing much harder, much faster. It's like jailhouse sex. It's going to be rough. Maybe the Nasdaq can only withstand, 3-4 months of this and not. Remember, the Nasdaq withstood 11 months of QT in 12 months. Even if depends on which peak you go with this peak, and then went down. I think Bitcoin is, rather than doing its own thing right now, Bitcoin is going to follow the Nasdaq relatively closely this time. But however, I don't think the Nasdaq can last this long. I don't think the Nasdaq can last this long. Nasdaq maybe has a 3 or 4, 5, 6 month run, 3 to 6 month run, and then tops out. So Bitcoin, I'm thinking the same thing. Another 3 to 6 month run, and then of course you see why. Remember, here's another important point. Remember how around here, basically around January 30th, Federal Reserve signals a more flexible approach to balance sheet normalization. Why do you think the Fed was suddenly talking about, a more flexibility? And that's January 30th. Jan 4th, it also said more flexibility, right? Why in 1 month they suddenly talking about more flexibility? Well, the reason is this. What happened in January 2019? Look at this. This is January 2019, right? January 2019 is the Federal Reserve after Christmas. This was 24th, 2018. Obviously, the Federal Reserve wasn't working that day because it's Christmas, right? Christmas, New Year's. When they came back on the 4th of January, first chance they had when the market opened, they said, we need more flexibility on QT because it's crashing the market, because the Nasdaq went into bear market territory, right? Over the last 3 months, right? It went down 24% here. So I would say same thing happens again. We get another 3 to 6 month, tops 1 year run up in Nasdaq, and Bitcoin follows, and then we get a massive crash in both. Bitcoin should crash harder than the Nasdaq, as it's always done. And then when the S&P 500, not the Nasdaq, but when the S&P 500 is down 25% from the top, 30% from the top, maybe 25 to 40% from the top, right? That's when the Fed will come out again. Right? Again, when it'll come out and say, hey, look, we need to save the market. We need to be flexible on QT. We're gonna end QT soon. This is our timetable for ending QT. And when they announce that, right, or even before they announce that, see here, Bitcoin bottoms. And that's the time to get in on Bitcoin and all your favorite altcoins, provided they've survived that massive winter, right? So those are the once in a lifetime opportunities, once in a decade time opportunities that people wait for. People want to get in to basically make a massive fortune. Okay, so just a couple of more quick things. One, I want to look at the US 10-year yield. The reason why we're looking at that is because it's had this massive, insane run. This is a weekly chart, by the way, and this, as you can see, is okay. So as we can see, this is the US 10-year yield, and the higher this rises, the higher the cost of borrowing, and that's what's been killing the Nasdaq. Now, as you can see, it's actually broken this massive long trend line that goes all the way back to 92. That's a 30-year trend line. This is a weekly chart, 30-year trend line, and the 2-year yields have just smashed through it, and it's just been going parabolic. How long can this last? Maybe another week, maybe another 2. When it heads down, basically Nasdaq is going to jump, because it means, the way you discount cash flow is going to benefit and be much more favorable to tech stocks, which are, have huge hopes and earnings in the future. And when Nasdaq jumps, basically Bitcoin will likely pop as well, because it's been following the Nasdaq, as we just saw. So I'm watching this chart, and I think we'll get a pullback here. Another one I'm watching is the US dollar. US dollar is at 101 now, 101. Again, it's been having a pretty big run as well. It's coming into, this significant resistance area around 102.5. If it was to pull back from there, then I think it could go all the way down to about 98. Can pull back to 99, 98, somewhere around there. Again, US dollar is 52% correlated with the Bitcoin, and basically inversely correlated, which means when it's going up, Bitcoin tends to be going down. When it's going down, Bitcoin tends to be going up. So what does all this mean? This basically means that my conclusion, as I have been saying, is that in I think we get a big rebound, a really big rebound next few months in both the Nasdaq and the and Bitcoin. And the date I'm looking at is May the 4th, because what happened is last time, if we look at the Bitcoin chart, last time when the Fed had the meeting right here, last time the Fed had the meeting March 16th and decided to raise interest rates, March 15th, March 16th. This is the day when Bitcoin started rallying and did that big run up to 48K. This time, I'm looking forward in the short term to maybe do a test around 33.34, because that would be in line with its parallel ranges being in. See the yellow range. If we connect those two tops and connect those two bottoms, I'm thinking Bitcoin would touch around this 33.34 area, and then basically, or it may not go down that low, maybe come down to about 37.38. It's already done that, and then pop off on when it comes to early May when they make a decision. So it basically just means there's a lot of uncertainty in the market right now. When the Fed does its meeting on May the 4th, and then the other shoe drops, and then the uncertainty ends, and then the market rebounds. And I think between now and May 4th, I would be looking for opportunities to be accumulating altcoins and maybe even Bitcoin stocks. Obviously, this is not financial advice. This is it's just for educational purposes. This video. So yeah, in conclusion, it's going to be a really hard and fast QT this time. Rough as jailhouse sex. I think the Fed, as usual, the Nasdaq, the QQQ, the Bitcoin will rebound in the next few months and have a big rebound. Right now, we're in a bottoming process. Bitcoin might have a little bit more lower to go, like say mid-30s, lower 30s, but eventually it's going to have a pretty big run. I think the Nasdaq can make a new all-time high, which isn't that far away, which is only like 12-15% away. Bitcoin getting above 69K in the second half of the year. So far, I'm not seeing it unless things change. But then again, I can always update in the next month or 2 months or 3 months. So until then, you enjoy yourself. And this is Pablo He-Man. Catch ya.